the financial aid coordinator. I recognize him of you. Just real quick, you're more than welcome to come in anytime. You don't need an appointment for the financial aid office. If you have any questions at all, we're open from 9 to 5, Monday through Friday. I can answer some more general questions via email, phone, or walk-in. If you have more detailed questions, you can always talk to your financial aid counselor. So please know that is there for you anytime you need it. And then Rita is here. She's our Director of Career Services.
Hi, nice to see you all.
And
Thanks for coming.
she would like to help you out in any way, in that way as well. And then I'm going to turn it over to Maria Benedito Cecilio. She is our speaker about the taxes. Thank you for coming.
Thank you. Thanks. So welcome. It's my pleasure to come and talk tax. You know, we have a presentation, slides that we're going to show you, and at the end, we're going to any questions. That doesn't mean I'll be able to answer all of them, but you know, I'll just do my best. Before I start, I'd like to know, by show of hands, how many of you are foreign students with visas here? Okay, about almost half. Okay, thank you. It is more complicated, those returns. I'm going to talk a little bit after the slideshow about it, so that you know I am present a U.S. citizen, but I was not when I came to the U.S. I came to the University of Minnesota for my graduate studies, and I was just one of you. I had come here just to do my graduate schools and go back home where I had a career and all that. It just happened. I met someone, I didn't want to come back with me, kind of messed up my plans. But anyway, I'm here. I enjoy to be in the U.S. I did not want it, but you know, it's life. You just make choices. So I have my family, my kids here, so I'm never going to go back home. I visit, but you know. So I will address some of your situations. So what I want to tell you now, I don't do many. I do very little foreign, but I'm interested because I had to kind of do those types of returns when I got here, so I know a little bit about it. Okay, so I work for H&R Block. H&R Block has been preparing taxes since 1955. In 2015, so this year we have our 60th tax season. So that's where I come from. The reason I'm not using my degree, my degree is in economics, and I decided just to raise a family, but I did really miss working. It was very hard. My husband is faculty at UCLA, so it was really hard for me not to work, but I just decided I'm going to stay home and raise the kids because I didn't have the support that I wanted to raise a family like I have back home. By the way, I'm from Portugal originally, although I grew up in Africa, but it's I'm Portuguese. So I just stayed home, and it was wonderful. I had a good time, but I do hate cleaning the house and do all of that, but I had to because we were living with one income. And I just, because I'm from economics, I decided, well, I'm going to start buying stocks in the stock market, you know, just like get entertainment, you know, besides cleaning house and having kids and clean kids and all that. And my husband said, you know, you better you just go and learn how to do our tax, so then I have to go to a CPA, because once you start buying stocks, I don't know how to do the taxes, and he's the American one, right? So I decided, well, how hard can it be? Because all my life, until then, I just had taken classes or taught classes. So I said, oh yeah, sure. So someone told me, go to H&R Block. And so I did go to H&R Block. I registered, I took the class, and I thought, oh, this is kind of interesting, you know? So I ended up not only learn how to do my taxes, but for 4 months I ended up working, and it was a really nice break. It was hard on my family because I couldn't give so much support to them, but I couldn't wait for the tax season to come and then at the end of the tax season I was so happy because I was so tired. So it kind of worked, you know. So my office is very close to where I live. I could support the kids, drop them at school, pick them at school. Anyway, this is more what you want to know about my life. But I just wanted to explain to you why I ended up being at H&R Block. Nice place, so maybe one day if you're in the same situations, you might consider. So we have lots of tax professionals, and We have lots of tax expertise. We prepare federal, state, and local returns for individual and businesses. Some people think H&R Block can only do a very simple return. Not really, you know. In terms of individual, we do all types of individual return, and we do business returns also. Everyone that, to do your taxes, you need to have a tax ID. Most people, everyone that is born in the US or is here legally, except for the visas, and even some with visas, they have what's called a social security number, and then the rest of you is going to get an ITIN. So it's a tax ID number for illegals, you know. When I mean illegals, people that come to the US not even with a visa. So that's like, I came with a visa, I was always legal. I was an alien, but I was always illegal. But some people just come, there's no control over it, you know. So they can get an ITIN. The ITIN doesn't give them legal status, it's just to do the taxes. Basically, there's this thing that IRS, all they want is to get your money. So pay your taxes, you are okay. Immigration is two different things. So just because you have an ITIN doesn't mean you can legally work, but you can legally pay your taxes. And the two, they kind of don't communicate. So it's like IRS, now all I want is just our money. So file taxes, yes, it's true. Everyone has to file taxes. You make money, you have to file taxes. Why taxes exist? Well, basically support service, school, parks, the fire, the police officer, our government. Some services we are happy with them, some we are not, but tough. That's just the law.
Basically, yes.
So, and then some people, you know, there is this idea of some of us, we have to file taxes. So there's like filing requirements. If you fall under certain categories, you just have to file your taxes. Now, some people, they are not required to file the taxes, but they might want to file taxes. And this, it's more for the residents, so someone that resides here, have a social, because you might qualify for tax credits. I have some clients come to me, and I tell them, okay, so let you know, because when I file your taxes, I charge money, because my company, you know, requires me to charge. We are for profit. So I tell them, okay, you are not required to file, because you make very little, but if you file, you know, you get money back. So although you are not required to file, you might want to file. So these are different concepts, being required and not being required and wanting to file. You know, it's like, well, if you don't file, you don't get the money. You don't have to file, but if you do file, you might get $2,000, $3,000, $4,000. Depends on certain conditions, of course. So there's some tax credits and demonstrated eligibility for financial aid. I have lots of clients that come, you know, it's like, oh, my son only made $1,000. Does he have to file? It's like, no. But sometimes because of financial, they want the show return is much simpler than saying, I'm not required to file. So they come and file their return, you know. No money back, no nothing. But so there's other reasons why you might want. And now, this year, 2004, when I mean this year, we are in 2015, but the tax year is 2014. So there's this health insurance premiums. Basically, the present administration passed a law, the Affordable ACA Care Act, thank you, that requires almost everyone to have a health insurance. And that applies to everyone that is a citizen and everyone that is a resident of the United States. Okay, residents and non-residents who live and work in the United States. Basically, if you make money in the United States, you are, to start with, you are required to file your taxes. Even if you are not a resident in the United States, you know, you reside somewhere, you are here temporarily, you make money here, you need to file your taxes. Even if you don't live here, if you live, I don't know, in China, you have a home here, you sold a home, you have capital gain, guess what? You have to file your taxes, you know, just for that. So the paying tax is an obligation, not an option. You know, they say death and taxes are two sure things in life. That's basically it. Regardless of your immigration status, means whether you are resident or non-resident, filing taxes, unfortunately, most of us have to do. Income taxes are due by April 15th, so the IRS here in the United States, and that changes from country to country. Other countries, the due date is just different. In the US, they open from 15 January and finishes on April 15. If you cannot file, there's you can ask for a few more time to do that, but you need to file the required paper. If you don't, you might have penalties in case you owe money. Okay, so what do we need to file? To file taxes, you need a social or the ITIN. If you do not have a social and you do not have an ITIN, you need to file the taxes, and we require this ITIN to file taxes. I have several clients that come, oh, I made money, mainly now that the president wants to change immigration law, allow some people that have been here illegal for many years to actually get residency. So one of the important things is to file your taxes. So anyone that tries to go through immigration to change their status to legal in the US, they have to have all their taxes filed since they have been here, So for that, if you have a social, that is fine, it's a non-issue. If you have the ITIN, you file the taxes, we send without a number, it has to be corrected. We need to follow all the procedures. It goes to the IRS, is a little bit different, and then the IRS will process it and then send a paper saying, okay, this is your ITIN. In the past, these ITIN were forever, not anymore. I think things last year or 2 years ago, these ITIN have I don't know, a life of 2 or 5 years. So every 5 years they have to renew it. So they try to control things more. And then what you need the tax, how much money you make. W-2s, 1099s, if you have a bank account that pays you interest, a 1099 INT. So anything, so we do not tax wealth. We just tax the growth that this wealth generates. You are, in a way, a wealth, because when you generate income, it's the income that your wealth generates. The more education you get, that's why you are here. The more education you have, the more wealth you got, the more income you're going to generate. So you are investing in yourself. So consider this W-2 as the outcome of the wealth that hits you. So the U.S. does not tax wealth, but tax any growth that comes from that wealth. And then we also need information on spouse, are you married, are you single, children, other dependents, and of course anyone that goes on your tax return needs birth date, social, or IT. Okay, 1099 NR. So the US system is kind of interesting. Everyone that is citizen and residents, we file the 1040. So, oh, please keep the other one. There was one. Oh, okay. Let's go back. So everyone that is in the U.S. has to file a tax return. So that's the 1040. But if you are foreigner, so you are needing a visa, some people have to file a 1040. NR. NR stands for non-resident. It becomes a little bit complicated, how it is. So if you are in that situation, if you are here legally in the U.S. and you have a visa, the best is to come and go and talk to someone, an expert, that is going to ask you questions. When you came here, are you here for a teaching position? Are you here as a student? Are you here as an apprentice? Are you here as an athlete? Everything kind of changes, Sometimes there's some accords, depending on your country of origin. But so some people have to file a 1040 NR, but it's not required. Okay, but this 1040 NR, if you come to the United States illegally Remember, all of you are aliens, but you came legal. Legal in the sense you have a visa. But if you come illegally, you don't have to do a 1040-NR. Don't ask me why Congress passed the law. It doesn't make any sense. You have to file. You just file like you are a resident. Why? It's me. I don't understand. It is what it is, So, non-residents, aliens, with personal service income below this filing threshold are not required to file. But be careful when it says before this threshold. Most of the time, these thresholds are filing requirements, depending on the source of your income. If it's from a W-2, and what is a W-2? I keep saying it's W-2. W-2 is that when you are an employee, you work from someone, so this is true. But if you are 1099, who has heard about 1099 here? Yeah, if you are like an independent contractor, most of you are going to fall under that situation because you are kind of artists. And people let you do what you want, someone like I hired you, or I want a painting, or I want you to perform something, a sketch for my children. You are independent contractor. Independent contractor, there's no below. If you make more than $400, you just have to file basic. So it's a little bit different rule. So be always careful. People forget where the source of the income is. So usually true, but not always. A non-resident alien that was a student, teacher, or trainee was temporarily present in the United States and the FJMK visa and had no other U.S. source. Okay. If you fall under this is also, you might have to file a return, so take it with a grain of salt. These people with these FJMK visas, you have to file returns if the money is earned here in the U.S. And you have to be very careful. Most of these visas, what happens is that people with most of those visas, they cannot file the regular form. You have to file a form that has an NR. So it's a totally different type of return. And what I want to impress upon you is that the IRS is more and more computerized, the old world is. And now they can kind of control things more. They have their checks, so they check things much more than they ever did. So if you file a return that is not correct, that might come and bite you in the future. And none of us knows what our future is going to be. I came to the U.S., I thought it was just for 5 months. When I came, I couldn't wait. Before even I was here, I couldn't wait to already be back. That's how I felt, because I went to Minnesota, it was December, and the news, it was all over. It was one of those days, there was full snow bags, they had to cart and dump that snow. So when I look at it, I had grown up in Africa, 20 years, east coast of Africa, Mozambique. Portugal was already hard for me because of the cold, although I'm Portuguese. Then come to Minnesota in December, and I saw this, it's like, I was just like that, basically. But look, here I am, I end up just staying, things just happen, the department offered me just a scholarship to stay. They thought I was doing really good, go for your master's and then go for the PhD. So things happen, so now they can track things, so be very careful to have a correctly return done. Graduate students with training, okay, remember, all of, yes?
Okay, I understand. If we have a W-2 and earn less than $4,000, then we don't have to file taxes.
I believe that's true, yes.
Yeah, but would it be worth it?
So you're talking, you as a 1040-NR?
Yeah.
Non-resident? Maybe not. But if you come to me, we'll look at it in an agent of law. If it's not, we'll tell you, no, it's not worth it, bye. We don't charge you.
Okay.
No, I don't think it will be. But sometimes I avoid to say that because I might not be thinking about some specific situation, It's not that simple, a tax code. So because sometimes the client comes and asks me, oh, you know, is this helpful? I say, okay, let me look at, in my mind, I'm already decided, yes, no. And so usually when I think no, it is no, but not all the time. There are times that I think no, and then it's like, oops, I'm glad I didn't say no, because I was totally wrong. So, you know, I don't have a computer in my brain to count those things, you know, so, but chances no. Any other questions?
What about the OPT graduate student?
The same thing. When I have someone that is from outside the U.S., what I do, I just ask questions. What country you came from? And you know, remember what I told you. I don't do many of these. I'm just interested because I did these types of returns, so I know my situation a little bit. When I even married my husband, I had to go out of the U.S. and I was paying taxes back home. I was paying taxes here, so I know a little bit, but I know very, very particular cases. I don't know everything, so what I do, I collect all the information, and then I go and make sure, you know, read all the rules. So I need to know the visa, when you got here, what, you know, I ask all the pertaining situations, and then I say, okay, I'll get back to you. That's what I do because I'm not going to have an answer right then and there, and I want to give you the right answer. So I just go, I know where to go get my materials, I know what to go read, check everything, and then I'll come to you. I said, okay, I know what you have to do and what pertains to your situation. Okay? You have a question? Okay. This is what a W-2 looks like. Usually, so they have here wages, Social Security. On the W-2, they take taxes for Social Security and Medicare taxes. This is what a 1099 miscellaneous is. Just put usually on that box, just says, oh, you make $200, $500. They now have a rule that if you pay someone, like if I have a company and I hire someone as a W-2, I have to give, even if it's $1, I've seen W-2s with $1, I have to issue a W-2. But here, by law, if it is if I pay anyone $600 or more for the year, not per job, but for the year, I have to issue. Otherwise, if they catch me, if they audit and catch me as an employer, I'm gonna have problems with IRS. I have to pay fines. But if it is below, I don't have to. So my husband does a little bit of freelancing, you know, he's a researcher, and he has received some of these with below 600. Sometimes they don't, so I keep track of it. But if it's 600 or more, they have to send it to you. Or then IRS says, no, you know, we pay you penalties, and you are not, you know, you can. Now, if I pay you under the table, I have to swallow as an employer. So if I really don't want it show anywhere, but many times be wary, because what happens is that the employer sends these late. So if someone tells you, pay you under the table, be careful that is really so, because I've seen cases that they said, clients come, they said, the IRS said I made this amount of money, but that person told me was paying me under the table. I said, you know, they didn't tell you the truth. The IRS also says on the law it says whether you receive this or not, if you earned it, you have to declare it. If you are not an employee and do not receive a W-2, but you receive payments for work or service performance, you are self-employed. You may receive a 1099, I cannot touch these, a 1099 miscellaneous. No taxes are taken out of these, you're required to pay your taxes. And I'm going to let Lynn, he's going to talk a little bit more of the 1099 miscellaneous. You want to take over now?
Yeah, sure. Hi, I'm the office manager for H&R Block, and like Maria, we've got a long history of doing taxes, and the way I would phrase it is, Maria was very good at saying, we don't know all the answers, but we can find the answers for you, and that's what's very important. Maria's been doing it for a long time, I've been doing it for a long time, and there's always surprises. And that is not a typical case. Everybody's unique in that. So what I wanted to talk to you about is 1099. I have a daughter who's a singer, an actress. She's trying to make it into the TV and the movies, so she goes to a lot of auditions. She works in amateur theater. She works in singing in various places, but she gets paid this way. And the first time she came to me and said, do I need to pay taxes on this? Because when you get this, it's your responsibility to pay your taxes. And that's what Marie's trying to explain, is that probably most of you will get this in the entertainment field. And the employers, they just have to report this to you, and it also gets reported to the IRS, the government. So that government knows with their computer system that you receive this amount. So whenever you have this amount, you've got to pay taxes on it. There's federal income tax, there's Social Security tax, there's Medicare tax, and there's state taxes. California has an agreement with the federal government that when the federal government sees this, they send a copy to the state of California. So the information's out there, and you have to pay some taxes on that. Whenever your income is over $400, you got to pay Social Security and Medicare tax. Your income may be below the threshold to pay income tax, but you still have to pay Medicare and Social Security tax. So when my daughter came to me and said, what do I have to do about this? I don't make enough money to pay taxes on it. Well, that's federal income tax. Because it's over $400, she still has to pay Medicare and Social Security tax. So you get lulled into the process that you are making money and it's all spendable. You have to realize that some of that money you have to pay taxes on. And one way to avoid that is make estimated tax payments. Now, if you're making this and you're making a lot of money, maybe $1,000 a week or $20,000 or something like that, you should make estimated tax payments. Every quarter, you can take part of that income that you have and make an estimated payment to the federal government and an estimated payment to the state government. So when it comes time to finish the year and summarize everything and pay your taxes, you've already contributed some of your taxes. And you may even get a refund, but you reconcile that at the end of the year when you do your taxes. Do you owe a little bit more, or did you pay so much in there that you get a little bit back? So it's very important that in your industry that you understand that you've got to pay some taxes on that income. Turn it back.
Okay. So, if you are confused, let me rehash things. Most of us pay when you are an employee, so no tenant miscellaneous, you pay income tax. But remember, I was talking to you about Social Security and Medicare tax. Well, when you are an employee, your employer takes already the Social Security and Medicare tax. Now, they have to pay half of it, you pay the other half. The two together, it's about 15.3%. So from you comes half of it, and the employer pays the other half. Well, when you are self-employed, guess what? You are simultaneously employee and employer. So you are stuck with 15.3% of self-employment tax. It's Social Security and Medicare. My husband said, what is this? I said, honey, it's just Social Security and Medicare together, but the two. Now, when you are an employee, you pay the Social Security taxes on whatever you make. When you are an employee, yeah. When you are self-employed, it's after deduction. So if you are self-employed, extremely important that you keep track of all the expenses, mileage that you do, supplies that you buy. Anything that is job related, keep those receipts. Now, some people keep gas receipts. Yeah, keep your mileage log. The IRS, even if you can take either actual or standard mileage deduction, you want to keep a log of the mileage that you do on the job for that job. And any other thing, when in case in doubt, just keep the information, keep those receipts. Because when you are self-employed, this is how much you made, 5,000. You are not going to pay self-employment tax on 5,000. It's after the deductions. And those deductions help quite a bit. Now, if you are just at home and you don't do anything, you don't have no deductions, I have 1 or 2 cases like that. Then you pay on the full amount, because the deductions are 0. But most of them, and depends on the type of work you do. For example, you guys are in filming, that equipment is going to be part of the deductions. Now, because that is a special deduction, we need to amortize, but we need to know when it was bought. You bought that for your work, to film or to edit. So whatever equipment you need, keep all those receipts. Okay, a deduction. I kind of jumped again. A deduction reduces taxable income. Yes. So those deductions on the self-employed are extremely, extremely important because not only reduces self-employment tax, but also reduces income tax. So you have to pay the two. Now, there are some credits. Credits help reduce the total basis owed on a dollar-for-dollar basis. So these kind of apply to you as students, not as students in CalArts, because here you are very on the art, but all the students, American Opportunity Credit, lifetime tuition and fees deduction, and student loan interest reduction. This credit here, the last year, it was for the year 2014. So in 2015 is out of the books, but we never know what Congress can do, if they can reinstate or not. For now, in 2015, that one. Those credits, some of you might qualify for it. My brother-in-law, my husband has a young brother, and he's in Minnesota. He just sent me, contacted me, Benedita, I didn't work this year, but I paid a ton of tuition. Do I have to file? I told him, no, sweetheart, you don't have to file, but he already knows. He said, but is it helpful if I file? Oh, yeah, it is helpful if he files because he's going to qualify. Now, all those credits have qualifications, It has to be, you have to be an undergraduate, it's just there's different qualifications. He's going to qualify. He's going to get $1,000 back. If he doesn't file, he gets nothing. And this is the opportunity credit. This is the really good one. This credit is in effect, it was just extended the life to 2017, gives you up to 2,500. Now, my brother-in-law is only going to get 1,000 because these credits, any credit can be refundable and non-refundable. A refundable credit is a credit that even if you don't have a tax liability, you get it. It doesn't go against taxes that you owe. A non-refundable credit can only go against taxes that you owe. So 1,000 is refundable and this is non-refundable. He has no tax liability, so he won't benefit from that. But he still benefits from that 1,000. You don't need to know. I'm just trying to explain. This is tax jargon, but so you have kind of an idea. It's an enhanced hope credit. Initially, that's what was on the books, and then they made it way, way better. What happened with this, the hope credit, basically, I have kids in school still, and my children, I only have now one daughter, she's at UC San Diego. I do not qualify, my husband makes too much money, the two of us together to qualify for the hope credit, but we qualify for the opportunity credit. Usually it's not available for students 18 to 24 subject to the kiddie tax. There's some conditions, If you are, my daughter, she's 19. She's at UC San Diego on her second year. She doesn't qualify for any of that. because she's our dependent. We pay for everything. She made $2,000, but she's not on her own. So she cannot qualify for it. Usually those things go to the parents. So in this case, I benefit for it, but I do pay her tuition and room and board and all that. So, but it's just, sometimes it's the parent. Here it is available to parents, and based upon qualified paid tuition, fees and related expenses paid in the year. So it's how much in tuition now. My daughter doesn't have a scholarship, but let's say tuition was $13,000. She had a scholarship of $12,000. She would only have, I could only use $1,000. So, so it has to be, when they say qualified paid tuition, so the scholarships, because it's not repaid, it reduces the amount that is considered that we're going to use to calculate the credit. But if you have student loans, it's a loan, it's something you have to repay. So if our tuition was $13,000 and we got a student loan to pay, it's still $13,000 because a loan is something you have to repay. So it's different from having a scholarship, doesn't credit. And these related expenses, books, computer if required for school, whatever is required for the classroom. I usually tell my clients, okay, yeah, your son is at COC or CalArts or wherever they are, you know, and I say, okay, how much was, and sometimes they have the tuition paid, but they have scholarships, sometimes the money, we need like with $4,000, you get the maximum. I said, okay, we are still short, how much in school supplies required for school, you know. They have, you know, if he is in economics and he bought a camera, I tell you know, in economics you don't need a camera, so it has to be for, you know, related to your school. Qualified paid tuition includes student financial aid loans, yeah, I already mentioned, available for the first 4 years of post-secondary education. When I started school, when I did school, there was none of this credit, so none of these applied to me. Let's say that I go back and I start myself, I just go to school and start another undergraduate. Can I use the American opportunity? No, because I already have my undergraduate. So it has to be, you can only use for 4 years. So if I have a child for 5 years, one of those years I cannot continue claiming. And it's, you have to be doing your first undergraduate. So it wouldn't apply to me, because I would be doing my second undergraduate, unless I lie, and you don't want, remember, IRS now, it's just cracking down. Lifetime learning credit. This one is available for everyone. There's not so many restrictions on the lifetime learning credit. You can get, the maximum credit is up to 2,000. Basically, you get 2,000 if you spend 10, I believe it's like 10,000 or more. A minimum of 10,000, includes tuition fees and some related expenses. This some related expense is very restrictive. You bought that camera, even though it was, you were required to, you are in film school, you just have to have, it does not include here. But I have, the way they wrote on the text, I have people that come from, they went to how to run your, cut your hair, let's say, and sometimes the tuition there already includes the school supplies, so you don't have an option to go outside and get, I don't know, whatever, you know, the scissors or whatever is needed. So when it's together with the tuition, then it's included, but not otherwise. Example, I don't know CalArts, but let's say to come here, they say the tuition, I don't know what it is, let's say 30,000, and it already includes books and supplies and whatever it's, you know, it's required. Then, so if it's a requirement that you have to get from the school and not from the school and you have no option, then it's included, otherwise it's not. No course load required. If I go back to school, I will qualify for the lifetime learning credit. It doesn't matter that I already did my master's, I almost finished my PhD, it just becomes irrelevant. So everyone qualifies for that. Now, not exactly everyone. it has to come from an accredited institution. So I have some people that say, oh, I went to this place where I'm learning foreign languages. It's not, I just ask, okay, ask them, are they accredited? Then if it's accredited, I can qualify for that. If they are not an accredited institution, no, it just doesn't count. CalArts is an accredited institution, for example. Okay. Tuition and fees deduction. So again, this is over in 2014. Lots of situations, depending on the return, we as tax preparers, we choose what is most beneficial for you. Here also, it's very general. So usually I have some clients that are better off with the prior one, lifetime, and some with the tuition. It just depends on the particulars of the return, how much money, because they go on different lines on the return, so they have different impacts. So it's kind of similar, but which at any given time we just choose which one is better off. Yes.
So does that mean that if you're paying your own tuition from the money that you're making, you can claim up to $4,000? Or how does that
Yes.
work?
Correct.
Okay, so then you wouldn't be paying taxes on those $4,000
Yes.
that you paid to the school?
Correct. This one decreases your adjusted gross income. Adjusted gross income is very important concept on the tax return because some credits are most credits are affected by the adjusted gross income. So this actually reduces your adjusted gross income. Now, if you take the tuition and fees, you cannot take the lifetime money credit.
Can you take them, either one of them, if you're non-resident? Or if you're on a student visa?
That is a very good question, and it's hard to answer. When we're talking about an NR, right, a non-resident type return, those are hard to find out. I'm not going to answer because I have a hard time answering that. I just need what's your situation, what's your visa, and then I can answer the question.
Well, but it seems like it's either, so you can qualify in theory,
Yes.
in a given situation with
Yes.
the right circumstances, as
Yes.
a non-resident, you could qualify for either one of those.
Yes, but not as, yes. Because what happened is, once you are in a visa, we have to determine, there's some things that we have to determine before we just figure out what we can, yeah. And the student loan interest deduction, we can, deduct up to $2,500 of interest paid. One of my sister-in-laws, she has huge loans, and so does my oldest child. So up to $2,500. They both actually have more than that, but once I enter the full amount, but only $2,500 will show up on the return. So they don't have to pay taxes on $2,500 of that. So, and there are qualifications. If they make too much money, it starts to. Okay, this is the tuition statement. Sometimes the parents, usually it's the parents that come and they tell me, oh yeah, my son or my daughter is still in school and yeah, I spent a ton of money. I asked them, I want the 1098T. So they didn't receive. I said, yes, all the schools have available. Oh, it says it's there on the website, So I always say, bring me this. What happened is that it's really a nice credit, so people were cheating. The IRS just caught up, and now we have to put information because the school has filers. So in this case would be like CalArts has a EIN number. The Social Security is for individual, EIN is for the companies. So I have to enter and send with the return. And also, sometimes people recollection how much they spend. We are off. We don't have computers on our brains. We kind of on the ballpark. So someone tells me, oh, it was about 2,000. Well, about 2,000. I need to know, was it 1,908 or it was 2,000? 500, so I need to know the right number, yes.
If your parents are paying for like also room and food and stuff, can we like bring a bank statement for you, show you like, okay, this is how much you spend in school and
Okay,
food and stuff?
that is a good question. That does not, okay, room and board does not affect any of these credits. Room and board only affects if you have, there are some special accounts, educational accounts. And I have quite clients like that, they have education accounts. It's accounts that the money goes after tax, grows tax-free, and then you can use only for education, like the 529 plan or the ESA accounts. And sometimes clients pay with that money. So what I do, those monies, I can go on the tax return to go against the room and board. But for the tuition, nothing can go against room and board. So if someone has tuition and has room and board and has these 529 plans, and the money is taken out, so I take that money and I go against tuition and board. And yeah,
So you suggest like us like maybe creating an account like that for students that are.
yes, but those accounts, it has to be created, like, for example, I can no longer put for my daughter, she's too old.
Right, okay.
Yeah, so it's when you are young, you just start stacking money.
You can make one for your own children, but
Yes.
not for yourself.
Yes.
Yeah.
But remember, one day you are here, you're gonna have money, you're gonna have a family. You wanna do those, yeah. I'm waiting, my oldest son has been married 7 years, no kids. I can't wait to have a grandchild and starting me. The first thing I'm gonna do, I'm gonna start from those accounts, but no children. What am I gonna
If
do?
you, let's say you moved here, to go to school, I'm a grad student, and my primary residence is still in New York, and I rent an apartment in Los Angeles, can that go to 529, through 529, my rent?
Yes.
And
And there's specific amounts, so what they look how much, like if the school you are, if they have room and board, so you go by how much it is the room and board for them, and you can go against those. And then, if your tuition, then the tuition, whatever, I can use for the other credits, yes. Now, you as a graduate student, you don't qualify for the best one, but you have lifetime that you qualify for, yes. And her case, she is a non-resident, I think you're keeping your New York residency, right? Okay. She is a non-resident of California. She's a resident and a citizen of the United States, which is different because not only you have to file the taxes for the federal, you have to file a minimum 2 taxes, federal and state. So the state on California, she's a non-resident, so she would file as a non-resident if she needed to file. And sometimes you have to file also for the city. Back east, they have all these, what is it, burbs, or whatever they call it, you have to file taxes for the city. Okay. And I think, and we are at the end. Sorry if I took too long. Any questions? Yes.
I've actually quite a few. So when we're filing out our FAFSA, there are a couple questions about like I had a work study job that literally pays like whatever it pays. I end up eating that day. So it's just like it's nothing. And then there's scholarship. There's a section that says write the scholarships are taxed, and I got scholarship from school and all this stuff music, but I mean, why would I write it? It's totally, it's deducted out of the tuition. I don't see any deduction. I don't know if I should, how would we know what type of scholarships are we getting? Like, how would we know that it's taxed?
Maybe the financial aid can help you with that. So what you are asking me, the first money, do you get anything, any tax form about, you mentioned 2 cases. The first one, you said that, did they give you anything at the end?
We have the form, we have the.
At year-end statement. Okay, so you put that one. With respect to scholarship, so they want to know how much the amount of scholarship. Just put there because they know these scholarships that you are going to receive, but you said they ask tax scholarships?
Yeah, they said the amount of taxed scholarship.
Okay, if the scholarship is not taxed, you have to figure out if it's taxed or not taxed.
Yeah, but I don't, because I went to the
financial aid, they don't know, so they said that I should ask you.
Yeah, when we wanted that question hopefully to be answered, maybe on an individual basis, if you guys were able to come in.
Okay, so,
But there is on the FAFSA application, there is a question, and people seem to be confused about whether scholarship is to be counted as income. And
okay,
so that might be something for
okay.
individual counsel.
On the 1098, the T, they're gonna say how much was your tuition and how much is your scholarship. Based on that, I can tell you if the scholarship is taxed or not. Okay, I think, and I would need to read, like, I don't prepare FAFSA, but once I read, they have definitions and then I can see what they are meaning. What happened is that if, let's say your tuition, and this happens a lot of, I don't think kids here, but I'm sorry, I'm calling you kids. Everyone is kids to me because you get to be close. I'm almost 60. Everyone is like kids. I apologize. Students that go to COC, sometimes they get stipends besides tuition, and sometimes tuition is waiver. So when I get 1099 from COC, the 1098, I'm sorry, it says tuition, for example, $500, and then scholarships, $1,000. Let's put 2,000. Well, guess what?
It's tax, the rest of
The difference, yes, because it doesn't go for books. Now the books is not there, we just subtract. So that's money that is taxed that we have to actually put on the return. People come to me and say, you know, if you go somewhere else, some people, if they don't know, they don't do tax, but I know this has to be taxed, so.
So if you
And
don't
maybe-
see any of that money, it's just like deducted from our.
Then it's
tuition.
not taxed, right? If it's the other way
It's a
around, it's
tuition
not taxed.
credit when you get a CalArts scholarship for the most part, right? It goes directly to tuition, we don't get it dispersed when it first
Yeah,
goes.
so
It's not
yeah, I think what they say is when it's upside down, it's where you get more scholarship than tuition cost. And then also take, on that case, take how much it is for book supplies, you can subtract that. The difference, it's taxable income to you. I think maybe that's what they are. Okay. Anything else?
I have a question, like, so I'm an art student and I have a lot of, basically, anything that I buy could be considered like necessary. But the things that I mostly keep on track of are like, obvious things like paints and tools and like things like that, and like some, like a flat file for my studio and that kind of thing. Is there anything besides 529 that I can use that with? Like, for any of those?
No, because you're a graduate student.
Because I'm a grad student. Okay, so then, can I file it like separately, like a 1099? So, like, can I use that as expenses for my?
She's smart. She's smart, yes, absolutely. I was putting my cards here. Yeah, absolutely.
So I have to keep doing that even though I'm a student?
Well, don't,
Sort of, yeah, okay.
everything that you use for the 1099, you can put there. Now, don't put there what you cannot justify in case of an audit from the IRS.
Right.
But what you can, absolutely put in there, because it's going to increase not only your self-employment tax, but also your income tax. Yes.
Okay, thank you.
And I forgot, someone wants, this is my card, I totally forgot to put that there. Okay, any other questions? Yes.
So the self-employed tax, what if, well, I'm a composer and I do also studio work for other musicians, but even if you get paid for a gig that you do, double of that you need to pay for your own like sessions when you're recording your music. So can we just like deduct all of that?
Of course, of course. For example, let's say you got a gig, as you call it, you got $5,000. There's a special form, we put $5,000. And then everything, keep track. If you pay someone to do on your gig, maybe someone did something specific, how much you paid someone, or paid rent. Yeah, absolutely, all those are deductions. You keep track of everything.
Can we also deduct that from the work study that we do here? Because it's like related to our major.
Tell me more about the work
So,
study.
well, the work study, is
You make money.
Yeah, the work study I
How
do.
do they pay? W-2 or?
It's a
Yeah,
W2.
yeah.
Forget about it, don't go there. Because it's different, you have to go on the 2106, there's okay, 1099 miscellaneous, it's easier, they allow more things. 2106, it's much more strict. My husband drives from here to UCLA, it's quite a bit and comes back. He's an employee. He has an office in the house, but he stays sometimes home, he tries to stay on Fridays because of the traffic, he works from home. But it's because he wants, not because he's employee. He has an office over there. We cannot do mileage. Now, if he was 1099, we could go mileage. We establish office in the home and take all that mileage. So, as a W-2, forget about it. It's not worthwhile. Usually it's not worthwhile.
Yeah.
Yes.
Are our returns affected if we're claimed as dependents by a parent or guardian?
Yes. My daughter, she made very little money. She's a dependent. The return, she doesn't get to claim the exemption. I claim her exemption on my tax return. Yeah, it is. So in terms of the 1099, how you do the form is everything the same, but
So I would do everything the same. So I would say I made $20,000 last year, but I'm claimed as a dependent because my room and board, whatever, is paid
Yeah.
for by my guardian.
when you are dependent, your return is different. You cannot claim the education credits. Your parents, if they qualify, they make $400,000, it's out. They cannot claim any of that. But depending on qualifications, they might or might not qualify for those education credits. And the amount of deduction that you are allowed, it's also different because you are.
Gotcha. So would it be more beneficial for the person claiming me as a dependent, or would it be more beneficial for them not to claim me and for me to apply for those credits? Or
Well,
I mean, I assume it's case by case, but
They have rules. Sometimes we are in a gray area. Sometimes clients bring me and they bring their returns and their kids, and I look. When it's in the gray area, I do what's best
yeah.
for the overall. But sometimes it's not a gray area. Sometimes it's like, no. He has to claim himself, or he cannot claim. So whether the parent is going to claim you or not, sometimes you cannot just claim yourself.
Yeah.
So then I put the parent.
Gotcha.
Yeah.
Okay.
Sometimes there's a little, that's not much, but there's a little bit of gray area over
That's
there.
right.
So